People are realizing, I made this equivalent for like a checking account earlier. If you're just holding dollars and not getting yield on them, you're effectively losing money, right? So if you want to be a participant in the on-chain economy, you want to have a way to park your money in a way that generates yield. Yield-bearing stable coins are the way to do that. And there's going to be a lot of competition with that space.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, I'm going to continue to show you all that the infrastructure for enterprise and institutional DeFi is ready. It has been battle tested, and we are now just waiting for regulatory clarity before financial institutions rapidly onboard into the DeFi and crypto ecosystem. Now is not the time to be stagnant. Now is the time to take advantage of your education and start to learn how to get your digital assets working for you, whether it's stable coins, whether it's actual digital assets like XRP or others. I cannot stress enough that we're undergoing a massive transformation, and these financial institutions will take advantage of these yield-bearing opportunities in the crypto ecosystem. And in today's video breakdown, I'm going to show you all that they are doing exactly that. So before we get into some documents from some reputable institutions that recently came out in April of this year, I want you all to first listen to some industry-leading experts talk about the underlying infrastructure in the crypto and DeFi ecosystem and how it is being built out and how it is now ready for financial institutions to come on into this space.
I would argue the end objective is retail adoption and mass adoption. Right now, I do believe that DeFi platforms such as DYDX, if you right now log into the UI, your experience would be as similar to a CeFi experience. So in that regard, I genuinely do feel that DeFi infrastructure maturity is at par or getting to par for retail and mass adoption to create that on-chain economy that you just mentioned. And I think that we are very close there, and we are getting to that stage to the comparison of the CeFi venues.
As you heard that gentleman from DYDX mention that the infrastructure for DeFi to support mass institutional adoption is there in his personal opinion. Now let's head over here to another individual representative, mention and talk about how we are at a DeFi inflection point and how DeFi has been battle tested, which is important as a retail user. These are the types of key vocabulary words you want to hear, because this shows us that the DeFi ecosystem is maturing at a rapid pace, and the perspective and mindset that people still have from back in 2022 when all of the DeFi platforms were failing, the infrastructure has matured way more than where it was in previous years.
This year in particular, we're hitting that inflection point in terms of institutional adoption of DeFi, right? Because especially if you kind of take a look from the more global perspective, right? You have firms like Laser Digital, which is a Nomura subsidiary, direct subsidiary, right? With the explicit mandate to actively trade in crypto and market making crypto. And then you have, Middle Eastern sovereigns, right, putting Bitcoin on their balance sheet and be very public about it. And I think to Rob's point, a lot of the DeFi plumbing that was first kind of pioneered in like DeFi Summer 2021, right? They've gone through like V2, V3, been battle tested, and can start taking institutional positions in size.
Next here on stage, they go on to talk about how TradFi will go on to utilize DeFi rails and how over the next 5 years, institutions will start to flood into the DeFi ecosystem.
You will still need someone to help you prepare for the future and like invest for your retirement. So they will keep doing that. They'll just use the tools of DeFi in order to bring these products more efficiently to the end customer.
I think medium long term is actually where it gets really interesting, because when you look at it from a macro perspective, I think we've almost forgotten back in the beginning, like this has been extremely turbulent 5 years, half a decade already. And the remaining 5 years are going to be probably as turbulent, if not more, right? We probably all forgot January 2020, Iran almost went to the war with the US, right? Then we had COVID. Then when we finally thought, oh, we're almost done, Ukraine war and then Middle East conflict, right? And then now we're in this, again, chaotic era. Right. And I think where the world is moving is, I think a realistic speaking and maybe a bit of a spicy take as I think US is slowly on the decline in terms of global influence. And I think it's going to be unclear how it plays out, but a likely scenario is like a Western sphere of influence led by the US and an Eastern sphere of influence led by China. Right. And so when you have that kind of fragmentation of global systems, right, what's going to be kind of the dominant financial rails. And that's where I think DeFi is kind of the contender, because you're already seeing a lot of BRIC countries, right, starting to use Bitcoin or DeFi rails because they're getting, Russia in particular getting debanked from SWIFT, right? And so they have no other choice but to use these alternative rails. You're seeing a lot of emerging markets, right, adopting DeFi because for them, it's the leapfrogging that, China did, right, with, smartphones and leapfrogging, like WeChat Pay leapfrogging credit cards, right? The same is happening in emerging markets. And so I think it's going to be a super interesting time for DeFi and for Bitcoin in terms of like the next 5 years.
So I like that perspective because it just paints a long-term trajectory, understanding that this is not some get-rich-quick schematic. Earning yield on your digital assets will become the new norm. And in my personal opinion, everybody should be taking advantage of educating themselves, becoming financially literate in this new digital transformation that we are currently undergoing as we speak. Now, let's go back to some recent fundamental developments that took place this past month in April that you may have missed, just to show you guys that DeFi developments from a large financial institutional perspective are ongoing behind the scenes. And so I said here in this post, Bitcoin maxis hate this regulated cryptocurrency terminology involving XRP. Sygnum Bank posted this just a few days ago. Zuger Cantonal Bank partners with Sygnum Bank to further expand its token offering with multiple different digital assets. The latest expansion of Zuger Cantonal's bank token universe illustrates the strong demand for additional tokens with diverse use cases to complement major protocols like Bitcoin and Ethereum. And then over here, it goes on to mention the additional assets that they are offering, including XRP. And then down here at the bottom, it says Sygnum's 20 plus networks of banks and international financial institutions now provide access to regulated cryptocurrencies for more than a third of the Swiss population. I like that key vocabulary because this to me shows that these digital assets listed fall in the regulated category. Now, I don't hold any assets outside of XRP and Litecoin in my portfolio, but it's still good to see some of the other ones listed. Moving on, if we head over here to another fundamental development that took place in April to show you guys the underlying infrastructure in the DeFi ecosystem, we can see here I said more proof that financial institutions are 110% interested in earning yield on their crypto if they are not already. And here we can see again, Sygnum Bank posted this via their Sygnum Crypto Yield Fund and how it's focusing on generating steady returns while minimizing drawdown risk. So yet another post from a financial institution talking about generating yield with their crypto. Now, via a more recent development, this was posted from Pyth Network just a few days ago. 4 days ago, they say here, the world's first digital asset bank is now publishing real-time market data directly on-chain with Pyth. And this fundamental development goes hand in hand with what the two gentlemen on stage were saying, how the underlying infrastructure to support traditional financial players in DeFi is now battle-tested and ready. And it says Sygnum Bank is Pyth Network's newest data provider, marking a major milestone in the evolution of modern financial infrastructure and bringing the price of everything everywhere. Sygnum's bank-grade data will be leveraged to power trading platforms, applications, and institutions, which will enable open access to a more reliable and transparent price feed, more transparent DeFi systems, redefining the global digital economy. Do you see that sentence of vocabulary words right there? I mean, I don't know what else to show people that the financial ecosystem is changing rapidly right before our very eyes. It says redefining the global digital economy, bringing more transparent DeFi systems. It offers new opportunities to connect your traditional markets on chain. Then down here, it talks about how Sygnum is pleased to partner with Pyth, and now Pyth delivers real-time reliable data that drives mission-critical systems and accelerates the integration of the traditional financial and digital asset economies. In a world where trust, transparency, and performance are non-negotiable, the institutions that shape TradFi are now helping shape the future of DeFi. DeFi is not just for early adopters anymore. That is a huge statement. With partners like Pyth and Sygnum, it is ready for the world's largest markets. And then if we come over here to the fundamental development, just to read 3 snippets from this, here is the piece. You can see the date on this is from the 16th of April, so it's relatively fresh. And it says, By joining the Pyth ecosystem as a trusted partner, Signum is bringing its world-class price data and technological capabilities to DeFi, empowering the next generation of DApps. If this partnership shows us anything, it is that the world's most trusted financial institutions are choosing Pyth. They are shaping a new market, monetizing their data without compliance or capital risks, and paving the way for new global digital economies. Signum brings its top-tier technological capabilities and price data to on-chain finance, which enhances DeFi's infrastructure with the same level of trust that has been at the foundation of their reputation since the beginning. Additionally, this partnership also works to expand Signum's active contributions to the DeFi ecosystem and continues its commitment to shaping the future of finance by supporting innovation. Then last but not least, it says traditional finance is no longer observing DeFi from the sidelines. It is becoming an active participant. Smash that thumbs up button and subscribe, because right there, in a nutshell, it confirms everything that we've been showing you guys here at CYPRX, that TradFi is not remaining dormant anymore. They are no longer sidelined. They're not being inactive. They are taking advantage of these DeFi opportunities. They are integrating crypto into their core banking infrastructure, and they will offer DeFi solutions to their clients. Now is the time for you, via a retail perspective, to get educated and informed on how to start earning yield on your digital assets. This is the new wave. As always, many blessings to you guys, bringing you all some of the realest information. Smash that thumbs up button and subscribe to the platform if you enjoyed this quick video breakdown, yet again showing you all that you should not be fearful of DeFi. You should be educating yourselves in the now to start to learn how to preserve, expand, and prolong your wealth preservation in the digital asset ecosystem as the industry continues to mature moving forward. If you all want to see and tap into how we are earning yield on our digital assets, head over to CYPRXtrading.com. We'd love to have you on the team. And if not, at least at a minimum, subscribe to the platform, watch the free content, and go out there and do your own research. Now is the time to get educated. With that being said, I'll see you all in the next video breakdown.